Welcome. Today, we're going to dive into a truth that every trader must confront, sooner or later. Some confront it early and evolve. Others confront it too late and disappear from the game forever. If you can't control yourself, you can't control the market. But before we get into charts, indicators, psychology, and market mechanics, I want you to pause. Take a breath, slow your mind for a moment. Because what you're about to hear is not just information. It's transformation, if you let it be. Most people come to trading for one reason: they want money. Fast money, big money, change my life, money. They search for strategies, magical indicators, secret signals, thinking that the market is something they will conquer, tame, or outsmart. But the market is not something you conquer. The market is a mirror. A perfect mirror. It reflects you, your discipline, your fears, your greed, your strengths, your weaknesses, your emotional cracks, and your psychological blind spots. Every trade you take is a statement about who you are, not about what the market is doing. And that's why today's theme matters so much. If you can't control yourself, you can't control the market. Because the market isn't the thing that needs controlling, you are. So let's begin. Blank. Let's talk about trading in the simplest possible terms. People believe that trading is about predicting whether a price will go up or down. That's the surface level view, the kindergarten version of the financial markets. Real trading, the trading done by survivors, looks nothing like that. Real trading is about controlling position size, managing risk, mastering your impulses, adhering to your rules, accepting your losses, cutting your losers, letting your winners run, staying patient, staying disciplined, staying rational in an irrational environment. Trading is 10% strategy, 20% execution, and 70% psychological self-management. The people who fail aren't failing because they didn't find the right indicator. They failed because they didn't build the right identity as a trader. If you don't have control over your emotions, impulses, reactions, and behaviors, the market will punish you. Not because it wants to, not because it's personal, but because that is how the market operates. The market rewards discipline and punishes emotional chaos. The market rewards consistency and punishes impulsiveness. The market rewards those who follow their process and punishes those who rely on hope. If you want to control outcomes in the market, you must first control the person making the decisions. And that person is you. Let's talk about the illusion of control. When traders begin, they look at charts and think, if I study enough, I'll control what happens. No, you can influence your preparation. You cannot influence the market's behavior. You can control how much you risk, when you enter, when you exit, how you respond to volatility, whether you overtrade, whether you stick to your plan. But you cannot control what price does next, how other participants react, macro events, algorithmic behavior, sudden volatility, news, liquidity conditions, black swan events. So let me say something that will free you once you truly absorb it. The goal is not to control the market. The goal is to control the trader inside you. Because once you master that, you don't need to control the market. You simply need to respond to it correctly. Now, let's break down the core issue. Why do people lose money in trading? It's not strategy. Strategies are everywhere. It's not indicators. Indicators are available to everyone. It's not information. The internet is filled with it. Traders lose because they fear missing out. They chase entries. They refuse to take losses. They double down on losers. They revenge trade. They trade too large. They get impatient. They want excitement. They break their rules. They can't sit still. They can't sit on their hands. They lie to themselves. They crave control in a place where control is an illusion. And all of this comes from one place: a lack of emotional regulation. Let's be crystal clear. Your inability to control yourself is the number one tax the market charges you. And it charges interest. Let's dig deeper into emotional control. Every trade you take is part of a long-term business plan. Or at least, it should be. But most traders treat every trade like a lottery ticket. They want this one to be special. This one to be the big one. This one to change everything. And because of that, they attach emotions to each trade. And the moment emotion enters the trade, rationality exits. Here is the truth. A good trader does not get excited when they win. A good trader does not get devastated when they lose. A good trader is neutral. Wins are data, losses are data, all of it is feedback. If you freak out on wins and spiral on losses, you are not trading, you are gambling. Let's talk about where this behavior comes from. Humans are wired emotionally for survival, not for statistical decision-making. The human brain was designed for short-term reactions, danger assessment, fight or flight, immediate gratification, emotional decision-making, but trading requires the opposite: long-term focus, probabilistic thinking, emotional neutrality, patience, discipline, delayed gratification. So the natural human brain is out of place in the market. And unless you learn to override your natural impulses, you will always be at war with yourself. The market doesn't beat you. You beat yourself. Blank, underscore, blank. Now let's get practical. Look at your last 20 trades. Not your last 2 trades, your last 20. How many followed your plan? How many broke your rules? How many were revenge trades? How many were FOMO trades? How many were over-leveraged? How many were driven by emotion? Most traders do not need a better strategy. They need better self-control. Your results are not random. They're a reflection of how well you manage internal chaos. The market is structured discipline. Chaos does not survive in a disciplined environment. If you cannot control your impulses, you will always be controlled by the market. Blank, underscore, blank. Let's talk about identity. You do not become a disciplined trader by trying to be disciplined. You become a disciplined trader by transforming into the version of yourself who embodies discipline. This is identity work, not strategy work. Let me ask you a powerful question. Are you trading from your disciplined self, or are you trading from your emotional self? Your emotional self wants excitement. Your disciplined self wants consistency. Your emotional self wants big winners. Your disciplined self wants controlled risk. Your emotional self wants revenge. Your disciplined self wants statistics. Your emotional self wants to be right. Your disciplined self wants to follow process. When you enter a trade, who is entering? Because only one of them belongs in the market. Blank, underscore, blank. Let's explore the concept of control. To control the market means to try to force outcomes. To control yourself means to respond correctly regardless of outcomes. You cannot control volatility, price movement, order flow, news catalysts, liquidity, but you can control how much you risk, how you react, what rules you follow, your mindset, your expectations, your patience, your discipline. The difference between a losing trader and a winning trader is not information, it's internal stability. The market will always test your emotional boundaries. It will tempt you, it will frustrate you, it will shake you, it will provoke you, it will challenge your identity, it will exploit your weaknesses, but it will also reward your growth if you learn to master yourself. Blank, underscore, blank. Let's dive into FOMO, fear of missing out. FOMO is not a market problem. It's an emotional control problem. When you chase an entry because you're afraid of missing the move, you are showing the market that you are not in control. The market sees that weakness. It punishes that weakness. Price will often turn right after you chase. Not because it's hunting you, but because chasing usually means you're late. When you chase, you are not following your plan, you are following your emotions. You are saying, I don't trust my process. I don't trust my patience. I trust fear instead, and the market never rewards fear. Blank, underscore, blank. Let's move to revenge trading. Revenge trading is one of the fastest ways to destroy an account. It happens because a trader decides emotionally, I need to get my money back now. But trading is not a place where you win back prestige, ego, or pride. Trading is not personal. If you make it personal, you will always make irrational decisions. Revenge trades are impulsive, they are emotional, they ignore risk, they ignore strategy, they ignore logic. A revenge trader is no longer trading the market, they are trading their anger. And anger is blind. A single revenge trade has ended more trading careers than bad strategies ever have. If you cannot control your anger, your frustration, your impatience, you will never control your results. Blank, underscore, blank. Let's talk about overtrading. Overtrading happens because people crave action. They crave stimulation. They do not understand that the most profitable decision is often not trading. The best traders know how to wait. Waiting is not laziness. Waiting is discipline in action. The market is not a slot machine. You do not have to pull the lever every 5 minutes. Your job is not to find endless opportunities. Your job is to execute only high-quality opportunities. Quality over quantity, patience over excitement, process over impulses. Remember this. Professional traders wait for the market to come to them. Amateurs chase the market and get punished. Blank, underscore, blank. Let's talk about risk management. Risk management is the most important part of trading, and the part that emotional traders ignore the most. Most traders don't lose because their strategy is bad, they lose because their losses are too big. If you risk too much, you are telling the market, I don't respect the probability of being wrong. Every big account blow-up starts with one thing: losses that were allowed to get out of control. Controlling yourself means controlling your risk. If your risk is consistent, your results are consistent. If your risk is emotional, your results are chaotic. Risk management is self-control in mathematical form. Blank, underscore, blank. Let's talk about patience. Patience is not just waiting. Patience is waiting without anxiety. Patience is waiting without forcing. Patience is waiting without self-doubt. A patient trader is a powerful trader. Most traders lose not because they make bad entries, but because they refuse to wait for good ones. Patience is the invisible edge in trading. If you can wait longer than your competition, you will win more consistently than your competition. Blank, underscore, blank. Let's talk about journaling. A trading journal is not about writing numbers, it's about writing behaviors. If you look at your journal and you only see entries and exits, you're missing the most important part, your mindset. Every trade should be recorded as, why did I take this? What emotion was present? What rule did I follow? What rule did I break? Was this impulsive or planned? Did I follow my risk management? Your journal is a mirror that shows you whether you are in control or being controlled. Blank, underscore, blank. Now, let's dive into emotional architecture, the internal system that governs your decisions. You need internal structure. You need internal discipline. You need internal rules. If you do not have these, the market will build chaos for you. The market will not structure your behavior. It will expose the lack of structure. The market is a stress test of your internal environment, and you must build internal stability stronger than external volatility. Blank, underscore, blank. Let's discuss detachment. Detachment is not lack of interest. Detachment is lack of emotional dependence. You must trade from a place of neutrality. You cannot lust after wins. You cannot fear losing. You cannot tie your identity to outcomes. A detached trader is stable. A stable trader is consistent. A consistent trader is profitable. If you want to trade well, detach from the outcome and attach to your process. Blank, underscore, blank. Let's get deeper into mindset. Your beliefs shape your behaviors. Your behaviors shape your results. If you believe trading is supposed to be exciting, you will seek excitement and lose. If you believe trading is supposed to be fast, you will rush and lose. If you believe trading is supposed to make you rich instantly, you will force trades and lose. But if you believe trading is a skill, a craft, a discipline, you will approach it with patience and precision. The market gives money to those who think correctly and takes money from those who think emotionally. Your mindset is either your weapon or your weakness. Blank, underscore, blank. Let's explore the concept of the internal trader. There are two traders inside you. The emotional trader reacts to every candle, panics at every dip, becomes euphoric at every rally, trades from fear, trades from greed, trades to feel something, trades without rules. The professional trader has rules, has risk limits, accepts losses, avoids impulsive decisions, follows a system, trades without attachment, thinks long-term. The outcome of your trading career depends entirely on which of these two is in control. Your job is not to fight the market. Your job is to silence the emotional trader and empower the professional trader. Blank, underscore, blank. Let's talk about the mathematical perspective. If your risk is consistent and your strategy has a statistical edge, then over a large series of trades, you will grow your account predictably. But emotional traders destroy this simplicity. They increase their risk when they're angry. They decrease their discipline when they're excited. They sabotage their own edge. Your strategy doesn't fail. You fail to execute it consistently because you cannot control yourself. Trading is a game of execution. Execution is a game of discipline. Discipline is a game of emotional control. Everything comes back to emotional control. Blank, underscore, blank. Let's talk about the long game. Most traders fail because they think in terms of days and weeks. Professional traders think in terms of years and decades. If you make decisions for short-term emotions, you sabotage long-term success. If you make decisions for long-term consistency, you can survive any short-term turbulence. The traders who last are the ones who understand. It's not about getting rich tomorrow. It's about building a stable, controlled process that compounds over time. Consistency is the real secret, but consistency requires control. Blank, underscore, blank. Now let's talk about discipline. Discipline is not something you feel, it's something you do. You do not wait to feel disciplined. You act disciplined, and the feeling follows. Discipline is following your rules, taking planned trades, closing your losers, avoiding revenge, sitting on your hands, managing your risk. Discipline is not a mood, it is a commitment. If you want to control your trading results, you must control your actions, even when your emotions disagree. Blank. Underscore. Blank. Let's go deeper. Let's talk about your relationship with loss. Losses are inevitable. Losses are part of the business. Losses are information. Losses are tuition. Losses are data. Traders fail not because they lose, but because they cannot emotionally handle losing. They take losses as personal attacks. They take losses as proof of failure. They take losses as something to win back. This is emotional trading, and emotional trading is destructive. Professional traders see losses differently. A loss that follows the plan is a success. A loss that violates the plan is a failure. You cannot control whether a trade wins or loses. You can only control the quality of the decision. Focus on the decision, not the outcome. Blank. Underscore. Blank. Let's talk about winning. It might sound strange, but many traders cannot handle winning either. Winning creates euphoria, and euphoria destroys discipline. After a big win, many traders feel invincible. They increase their size. They take random trades. They abandon their system. They ignore risk. Winning can be more dangerous than losing if you cannot emotionally regulate your reactions. A professional trader treats a win the same way they treat a loss, as data. You must remain emotionally flat. Winning should not change your behavior. Losing should not change your behavior. Your process should guide you, nothing else. Blank. Underscore. Blank. Let's talk about the market's nature. The market is neutral. It is not your enemy. It is not your friend. It does not hate you. It does not love you. It does not care about you. The market is a collection of participants responding to information, liquidity, and incentives. When you blame the market, you are projecting your lack of control. When you try to force the market, you are fighting nature itself. The market does not bend. You bend, and if you cannot bend with discipline, you break. The market will not adjust to you. You must adjust to the market. And to adjust to the market, you must control yourself. Blank. Underscore. Blank. Let's go into the mindset of high-level traders. Elite traders understand. They cannot control price. They cannot control volatility. They cannot control outcomes, but they can control the quality of their decisions, their risk exposure, their behavior, their restraint, their focus, their discipline. Elite traders succeed because they refuse to let emotions dictate actions. They are calm in chaos. They are stable in turbulence. They are rational in uncertainty. This emotional stability is not natural, it is trained. You must train it too. Blank. Underscore. Blank. Let's talk about the psychological cycle of losing traders. It goes like this. 1. They enter a trade impulsively. 2. The trade goes against them. 3. They freeze. 4. They refuse to take the loss. 5. The loss grows. 6. They panic. 7. They close at the bottom. 8. They enter another trade to get it back. 9. They lose again. 10. They spiral emotionally. 11. They blow the account. All of this happens because they cannot control themselves. If you break your rules once, you can break them again. If you cannot control your emotions, you cannot control your actions. If you cannot control your actions, you cannot control your results. Everything goes back to emotional mastery. Let's explore the role of expectations. Your expectations shape your behaviors. If you expect trading to be easy, you will take shortcuts. If you expect to get rich quickly, you will take unnecessary risks. If you expect every trade to win, you will refuse to take losses. If you expect perfection, you will break mentally when imperfection appears. Professional traders expect uncertainty. Professional traders expect losing streaks. Professional traders expect volatility. Professional traders expect drawdowns. Professional traders expect discomfort, and because they expect it, they remain calm when it happens. You must shift your expectations if you want to shift your results. Blank. Underscore. Blank. Let's discuss self-sabotage. Many traders sabotage themselves because they are emotionally addicted to chaos. They crave excitement. They crave adrenaline. They crave fast profits. They crave drama. They crave emotional intensity. They want the market to entertain them. But the market is not entertainment, it's a business. If you treat it like entertainment, it will treat your account like a donation. Self-control begins when you separate your emotional needs from your professional responsibilities. Trading is not a therapy tool. Trading is not an escape. Trading is not a dopamine machine. Trading is a mirror, and if you do not like what the mirror reflects, you must change yourself, not the market. Blank, underscore, blank. Let's talk about routines. Your routine determines your readiness. A trader without a routine is a trader without structure. You must prepare before the market opens. You must review after it closes. You must journal your behavior. You must track your performance. You must analyze your mistakes. You must refine your system. Preparation is self-control. Reflection is self-control. Consistency is self-control. The better your routine, the easier it is to control your impulses. Blank, underscore, blank. Let's discuss the concept of trading fatigue. Over time, emotional strain builds up. If you do not manage this, you will eventually lose control. Signs of trading fatigue include irritability, impulsive entries, forcing trades, increasing risk size, emotional swings, poor patience, lack of clarity. When fatigue sets in, your emotional self takes over. The best traders step away before fatigue controls their decisions. You must develop the discipline to rest before you ruin. Blank, underscore, blank. Let's talk about the relationship between discipline and freedom. Most people think discipline restricts them, but in trading, discipline liberates you. When you have rules, you do not guess, you do not panic, you do not chase, you do not fear, you do not force, you simply execute. Freedom comes from structure. Profitability comes from discipline. If you try to be free without discipline, you end up imprisoned by emotional chaos. If you want freedom in trading, your discipline must be stronger than your impulses. Blank, underscore, blank. Now let's go deeper into the psychology of impulses. Impulses come from fear, greed, boredom, overconfidence, desperation, frustration, anxiety, and every one of these impulses creates behavior that destroys accounts. When you feel an impulse, you must create space between the feeling and the action. A 5-second pause can save you thousands. A deep breath can destroy a bad decision. A moment of reflection can prevent a catastrophe. You are not responsible for your first thought, but you are responsible for your first action. Control your reactions, and you control your trading future. Blank, underscore, blank. Let's talk about the rule of one. The rule of one states, it only takes one undisciplined moment to undo weeks or months of consistent discipline. One oversized position, one revenge trade, one refusal to take a stop loss, one emotional meltdown, one blind entry, one ego-driven decision. Your job as a trader is to protect yourself from that one moment. You must build internal safeguards. You must build emotional resilience. You must build discipline so strong that when your emotions begin to spiral, your rules take over automatically. Blank, underscore, blank. Let's talk about process-oriented thinking versus outcome-oriented thinking. Outcome-oriented traders think, did this trade win? Did this trade lose? Was this profitable? Process-oriented traders think, did I follow my rules? Was this trade justified? Was my risk controlled? Was my execution precise? Outcome thinking creates emotional instability. Process thinking creates emotional control. Process traders win long-term because they do not break mentally when outcomes vary in the short term. Because outcomes always vary in the short term. Trading is not about controlling price. It's about controlling the person reacting to price. If you win that battle, you win the game. If you can't control yourself, you can't control the market. But if you can control yourself, you don't need to control the market, because the market naturally rewards those who master their mind before they master the charts.